Once you've managed to gather all the information about a stock and you've put in the hard yards with regards to researching it, you need to come up with a value for that stock from now to the future. In today's episode of Stock Due Diligence, we'll be looking at how you actually put a value on a stock. How's it going, guys? Ryan here and welcome back to the Stock Due Diligence series. We are up to episode 6 and today we are focusing on the culmination of everything that we have just done. The actual analysis and valuation of the stock itself. But before we get into that, guys, please remember to give this video a thumbs up if you do enjoy it. I appreciate it so much. It helps me out with the YouTube algorithm, and subscribe if you're interested in seeing this sort of content and much more. We cover all things investing, crypto, stocks and wealth management, so if that tickles your fancy, make sure you hit the subscribe and turn on the bell notifications. I'd also love to know your thoughts on what some of the best techniques you use are when it comes to actually putting a price on a stock. So without further ado, let's get straight into today's video. Now, effectively, we're at the stage where we need to start pulling together all the information that we have gathered and the research we've done on this stock in order to actually put a price on it. And not only are we focusing on the current valuation of the stock, we're also taking a look at what the stock could be worth in the future. Obviously, the aim is here to, pick companies which are going to make us money. So whether that be a dividend paying stock, whether that be a growth stock, whether that be a micro cap that we expect to turn into a medium or large cap stock, whatever it may be, this is what we need to focus on now and actually pull all the information that we've gathered and turn it into something really meaningful that we can use in order to put a price on the stock. So this begs the question, what do we need to do in order to develop our valuation of a stock itself? The first step is to create effectively a spreadsheet. And the reason I say a spreadsheet is because it's an easy way to capture and quickly display and also down the track compare data. And basically on this spreadsheet, it will cover all the key factors that we have looked at over the course of the past few episodes. The next thing we want to look at is what is the current state? What is the current valuation of the stock based on the factors that we've entered into the spreadsheet? We then also want to take a look at the future state, but one which has been defined by the company itself. So obviously companies are going to put out information and they're going to define their own future projections, put that in as a second scenario. Then moving to the next point, we then want to take into many different scenarios, take them into account. We want the best case scenarios, the worst case scenarios, the medium case scenarios. Basically what we're going to do is start adding in different factors, different elements, different uncertainties to effectively work out what would happen to the value of the stock if X happened. What would happen if Y happened? These are the sort of things we want to consider at this stage. The next factor you want to consider is industry specific factors. So for instance, we obviously talk about gold companies. They've got mining specific things you look at, and even down to a more detailed level. They'll have gold specific things that you want to look at as well. And the final thing you want to do is apply an element of risk. And this is due to the fact that you can't be dead on accurate. At the end of the day, the market is going to do whatever the market wants. So adding in a factor of risk will allow you to make a good judgment and provide you a bit of a margin, both positive and negative, in order to make an appropriate judgment. Let's start off by talking about some of the things that you'll want to include in your spreadsheet. Effectively, you want to include the key factors which are going to define and be useful for putting a value on the stock. So if we take a look at the financial side of things, for instance, things we'd be interested in looking at are current profits, revenue, EBITDA, those sorts of things, levels of debt, levels of cash on hand, etc. That way we can look at it from a financial perspective and put a value on whatever the stock is. Now these are pretty generic things, and once we get into the, I suppose, next portion of the video, we'll explain the industry specific things that I mentioned previously. So if you're looking at a gold company or a tech company, you're obviously going to be looking at completely different factors when it comes to putting a price on a stock and when it comes to the factors that you're determining in your spreadsheet. But effectively, simply what you want to do is focus on the key factors, and more often than not, a company presentation is a fantastic spot to start, as well as obviously the balance sheets, the cash flow statements, those sort of things. In the presentations, for instance, they always highlight the key pieces of information that they want potential investors to understand. So you'll know pretty quickly how much cash on hand they have, what their level of debt is. This is already information you've gathered though. So basically go back, have a look at all the information you've gathered, each of the episodes, note your key sections, put them on a spreadsheet so you can visualize everything together, and then you can effectively start your analysis. Once you've identified all those key elements, what you want to do is your first column. And your first column is going to be your current state. So obviously things like we mentioned previously, we've got cash on hand. What is the cash on hand right now? Debt. What is the debt right now? Revenue. What is the revenue right now? Profit. All those sorts of things. What is the current state of the stock based off the most recent information that we have seen? We don't want to include any future projections into this element. This will then effectively enable us to get an idea of where the company is then sitting at this current point in time. This is our base level that we are forming. The second column you want to put on the spreadsheet is that future state, which has been predefined by the company. So obviously the company is going to start setting, expectations and those sort of things, targets that they want to hit. That is effectively where you're going to be putting these numbers. So for instance, if they've stated that they're going to pay off their debt within the next 12 months, put in a future state of, 2 years in the future and say 0 debt as the option there. And obviously you'd expect them to have a bit more cash on hand potentially and those sorts of things. So basically what we're then doing is we've got our current state initially, and then we've also got the future state. And obviously what we want to look for is the future state looking significantly better than the current state? If it is, then obviously the company is more valuable. And the key here is to list the market cap at this current point in time, because this is the way we effectively determine the value of the company itself. So in your current state, you'd have an option as the market cap right now, and then you'd have the market cap for the future state. The next thing you want to do is identify the best case and the worst case scenarios. So obviously you've already got your current state sitting there and your future state sitting next to it. But these aren't the only two scenarios that could occur. Based on many different factors, we could see that this value in the current state and this value in the future state will be significantly different from what we initially think based on a variety of different factors. So what you want to be doing is taking into account other scenarios that could occur which haven't been defined by the company at this point in time. And this will become a bit more clearer in our next section, which we're going to discuss, which is where we focus on the industry specific things that you want to list. And the industry specific things are really where you're going to get your value out of this process. So let's go back to our gold company example. Now, gold company is obviously a mining company. A mining company is going to have its own subset of things which we want to understand. So for instance, if we're talking a mining exploration company, what stage are they up to? Have they done scoping studies? Have they done a PFS? Have they done a DFS? Are they already mining to some capacity? Are they drilling? Are we expecting results soon? What are those factors that we need to take into account? If we dig a bit deeper, how much is their resource worth? What is the current size of it? How close is their resource to the surface? What is the grade of the gold? These are the factors that we want to continue to then populate our spreadsheet with. And obviously you're going to start doing this from the very get-go. But this is something I want to touch on just afterwards, because obviously you need to have your basics of your current state, your future state, and your best and worst case scenarios. Get that in the back of your mind, and then when you actually are doing it properly, you want to understand the specifics of the individual industry. Let's take another example. If you are doing some stock research on a platform, let's say it is a gaming platform, and they make their revenue through subscriptions. So one of the key factors would be, how much does a subscription cost? The next would be, how many people have subscribed? Then maybe we want to look at, the year-on-year growth of the number of subscriptions, the total number of subscriptions, all these different factors, industry specific things which will effectively allow us to put a value on that individual company. And once again, we'll want to do the current state, the future state, and the best case and worst case scenarios when we are looking at these individual things. The final element you need to consider is the risk factor. And the risk factor has a large amount of significance due to the fact that some things are just simply unknown. And the reason for this is because calculations based off our research are never going to be accurate. The value of a stock is determined by the market, the number of buyers, the number of sellers at a certain value. A stock can go up hundreds of thousands % in value in a single day, and it can drop the same. These are distinct possibilities, so obviously we want to factor in risk. Now obviously those ones are very rare scenarios, but I recommend you factor in a risk of 5 to 10% on whatever you're putting in. So for instance, if you then determine the value of your current state, then you put your future states in and your best and worst case scenario, and you come up with a value of the company is going to be worth 500 million in the next 2 years, then 750 million in the next 5 years. What you want to do is then add that 5 to 10% risk, so you can have a bit of leeway, and it could be 5 to 10% good and 5 to 10% bad. So for instance, if you're aiming for $750 million market cap, then minus $75 million, that's 10%, and then add on $75 million, that's another 10%. That effectively gives you a nice buffer and a nice bit of risk, so you're effectively tempering your expectations. If it goes above your calculated amount, that's fantastic, but you also expected it. If it's below, you're not disappointed. It also removes a bit of those, emotional factors when it comes to investing in stocks. But it also gives you a more realistic approach, because at the end of the day, as I mentioned, you're not going to target and be able to pinpoint exactly what the value of that stock is going to be in 10 days, 20 days, 20 years. It is just not feasible. So make sure you add in an element of risk. It's extremely important just to temper your expectations. I really hope you enjoyed today's video, guys. Make sure you leave a thumbs up if you did, and subscribe for more of this sort of content. We cover investing, crypto, the stock market, and wealth management in general. So if that interests you, make sure you hit the subscribe and the bell button. I'd love to know your thoughts as well on some of the key factors that you consider for your comparison spreadsheets on the comment section below. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.